Savage Life family, we are back and we're taking another look at EVgo or CLII. And if you're watching an update for the first time, I just want to go ahead and let you know that EVgo runs one of the largest electric vehicle fast charging public networks in the US, and it is set to go public via blank check firm Climate Change Crisis Real Impact Acquisition. So I released a previous video explaining why this is going to be a majorly good bet. So I just want to give you guys another update since I did say I was going to buy into the company. So looking at it now, in the past week it has rose $7, but when I mentioned the video it has plummeted a little bit. And the reason it plummeted was because of two things. One, of course, because the SPY has been red. It's been a terrible week for the stock market, so of course it has been dipping. But two, it's due to the fact that an article came out. So I'm going to go ahead and show you this article. But it pretty much mentioned that they're questioning the fact and the legitimacy of charging stations and the current valuation of them, how they are currently overvalued. Now the only comparison I'm going to bring up now is blink charging, for a reason later in the video. But as you can see here, over $50, most of these charging station stocks seem to rise and blow up past $30. That's why I'm stating that this here is a good buy. Now I don't want to tell anybody to buy into a company, but I truly do trust this company enough to say so. So CLII, I bought into the company. I threw in $8,400, average cost $22, and I have 386 shares. As you can see down below, I kept buying limit buys and dollar averaging my cost. So the first one being on January 26th, I bought it for $23. It dropped down to a low of like $19. I held the bag, of course, and I bought 36 shares at $20. It went back up before spiking back down today, and today I bought $1,200 worth, which was $56 after exiting a couple contracts I had and profiting off of a couple day trades off of BlackBerry and AMC due to the hype. So 386 shares is going to take me a long way. I'm super excited. Now my plans for this company here, I see it has sort of a resistance around the $25-26 level, and it seems to sell massively around that price point. Now Robinhood is not showing the accurate chart that Thinkorswim has, but around the 24 to 25 level, if I see it has a probability of dipping below, I'll go ahead and sell for like about $600-700 in profit and buy back in as soon as it's in the $21 price range. I believe this $21 to $20 price range is the perfect time to buy back into the company. Now I do want to have these shares when the company does decide to blow up, and the ticker symbol is going to change for this company in the upcoming month or two, so you definitely want to have this bag held when the time comes. Now back on this article, they stated that the question really remains on whether supplying the fuel, whether if it's gas or electricity for EVs, will derive huge rewards to investors when gas stations don't generate massive profits. And then they came out with an example, and the example that they used is Casey's General Stores, or Cassie, however you want to pronounce it, is worth only $7 million for operating 2,100 gas stations, where the company makes up to 65% of gross profits of inside sales, such as alcohol and pizza. And this article is like mind-boggling. It shocks me due to the fact that it scared a lot of investors away from the company. These articles here are what scare investors away, and I want you guys to know that you cannot compare gasoline to electric at all. You can't compare an EV vehicle to a gas. Yes, they both take you from point A to point B. Yes, they both drive, they both are vehicles, but at the end of the day, the technology that is integrated into electric vehicles far exceeds the technology and what is inside of a regular gasoline vehicle. That's why we are transitioning over to electric vehicle, and that's why the electric market has so much money being flooded into it, and it will continue to do so for the next 10 to 20 years. Now, I guess I don't think gas stations provide an accurate comparison, because gas stations sell essentially the same fuel with the same fill-up time for essentially the same price. EV charging stations will soon split up into 2 lanes, which is going to be cheap, slow AC charging for locations where the customer has lots of time to kill, like residence locations, single family apartments, homes, hotels, and more expensive fast DC charging for standalone stations and shopping centers and restaurants and fleet locations within the DC lane. EVgo has a pretty good head start, and that's why I'm recommending EVgo out of most of these charging station companies that are soon to come out, and it's due to the fact that their DC fast charging is way ahead of the game at the current moment. You have to understand the value of DC fast charging. It's the key for EV, much more valuable than slow AC charger that all the competitors you've talked about are. Now, this would set EVgo apart. EVgo's fast chargers are compatible with all EV models currently on the market that accept DC fast charging, so they're not focused on one model in terms of, oh, just Tesla could use these chargers, oh, just General Motors could use these chargers. Vehicles that are capable to withhold level 3 charging are able to use EVgo's fast chargers, and they have networks in 34 states. So that's what's making EVgo #1 in fast charging stations. So if we see a company like Blink, and I'm not downplaying Blink, Blink is an amazing company. Obviously, I'm speaking for the retail investors who missed out on Blink. Of course, Blink has the potential to break 70, to break 80 in the long term, but a lot of us don't have $50 or thousands of dollars to buy hundreds of shares for Blink. But CLII, which is half the price, coming into the market, which is going to switch the ticker and open the eyes to a lot of new retail investors, does have the potential to break past 50, 60, 70 without a doubt in my mind. So I just wanted to give you guys a heads up of what's going on with the company. CLII is definitely going to make moves, and now that a lot more investors are flooding the market due to the recent articles and news that has been coming out with the Wall Street bets and the hundreds of thousands of people being able to pay off student loans, college debt, and medical bills, we're going to be seeing a lot more money flooding the market, and I want my subscribers ahead of the game. So here you have it, a gem here. If you're getting in under $22.02, which is my average cost, you're getting in at a bargain, so don't worry about that. If you guys have any questions, be sure to drop it down below in the comment sections. I'll catch you guys on the next one. See you again.